International Accounting Standards, one is the Statement of Financial Position. This is just a snapshot. It's formally known as the balance sheet. It shows the value of the business or the worth of the business at a particular date. So, unlike the Statement of Comprehensive Income, which is prepared for a period, this one is prepared as at a particular date. So we usually prepare it at the end of our accounting year. So this is the statement of financial position as at 31 March 2026. Then the first thing which you need to take into consideration are these three columns, and we need to label them. This is the amount, the cost at which the machinery or the asset was bought. This is the depreciation column, and this is the net book value column, which is the value of the machinery or of the equipment at that particular point in time. So we at first we've got our non-current assets, formerly known as fixed assets. These include buildings, machinery, land. They fall under non-current assets. So here we've got, I'm just going to put one example of buildings and PPE, property, plant and equipment. These ones, the amount, the depreciation, and the net book value. Then we also go to the current assets. These are the assets which are usable within one accounting period or within a year. So they need to record them in the order of liquidity, which the ease with which an asset can be turned into cash. So at first we've got inventory. We also have got our receivables, which are our debtors. Receivables. We have bank. We have cash. All these fall under. They do not depreciate. They fall under the current assets column. So we now add our non-current assets and current assets, so that we have our total assets here. So after adding, we have total assets. From total assets, we're now going to equity and liabilities. What the owners own in that business, equity and liabilities. If it is a small business, on equity, that's where we have capital, the money which was invested by the business owners. Then we also have got drawings. So drawings are being listed here, less drawings. If we reduce drawings, we also add net profit after tax, which we calculated from the statement of comprehensive income. Then we put our value here. Then we have got liabilities. These are the dues which the company have. So we've got long-term liabilities which can last over a year. We've got current liabilities, like on current liabilities, we've got the likes of accounts payables, which are our creditors, accounts payables or creditors. We also have got rent due, we've got salaries due. All those amounts which are short-term which we owe, they fall under current liabilities. Then on long-term liabilities, these are our liabilities which last for a period of more than a year. For example, we might have mortgages, debentures, etc. They all fall under liabilities. Then the total, we add it here. Then we add our equity and liabilities to get the balancing figure. The figure of total assets must be equal to this figure. That's when we say our statement of financial position is balancing. Thank you.